Charter announced its Q2 earnings July 28th and gave us a little bit of insight as to what growth they had. They had customers increased by only 77,000 small business and residential. They had a substantially larger increase in their mobile services, almost 650,000 people in Q2. And then they also bought back 1.1 million shares of common stock in the second quarter. Currently, the stock is trading at 10% down on year over year. Year to date, it's up 26%. The current forecast for growth is just shy of 3% revenue growth. Our EPS is looking at about, low to mid teens grower in the next 5-ish years, roughly 4 or 5 years. So EPS growth pretty decent for especially for a big company like this. So now let's value this company real quick. So we just saw EPS growth. We'll go 15. Charter does not have a dividend and revenue growth only 3%. Hopefully that can change going forward. This will make a better peg ratio for this company, make it a better buy. Now we can move over here, do our peers. We have Verizon, I believe AT&T. Oops, AT&T is not profitable. If they're not profitable, we can't use them. Uh, Siri, okay, AT&T is not profitable. Who else? Let's see. We have Siri, Dish. We'll throw Dish in there. And we can throw one more. We'll do LBRDK. BRDK. Make sure they're profitable. While that's loading, we'll come over here. We have our Graham's valuation formula, giving us a intrinsic value of 281, and they are profitable. Gives us a price of 315. We have a manual price to earnings calculator here. Cash and cash equivalents for Charter is currently $478 million. This is their balance sheet. So 478. Their debt is $108 billion of debt. Very debt heavy company. Oops, one more zero. And then cash from operations, we have, let's see, income from operations. So $6.4 billion. Okay. Let's make sure that's right. Is that 6.4 billion for, oh, that's 3 months. Okay. 6 months. So we're 12.3. 12. There we go. So we got a multiple, basically a PE of 14 years before this company equals its market cap, which actually is pretty good. That's saying if the company doesn't even grow or expand, just continues where it's at right now, it'll take 14 years to hit this market cap. And it seems like 20 or less is a good number for that calculator there. So Charter growth rate, I'm going for 3%. Average credit costs, we'll just stick with 11%. Their free cash flow is gonna be, let's come over to here to 6 months. We'll call that 4. So we'll say, wait, hang on, that's not right. We don't want interest expense. We want this. What 2.2 billion annual free cash flow. Cash and marketable securities was 678, correct? I'll check that in a second. 108 on debt. And I know they got 150 million shares. But we can also come over here and verify that to statistics, the share count. 150 million in shares outstanding. All right. So 108 billion dollars in debt, 478. So not even 678. 470, is that right? I thought it was 678. Oh, 478. Okay. So then now this gives us a negative intrinsic value, so we won't use this valuation. Um, and then everything else up here is filled out. Now we move over to the next chart. Get this under charter. So we have a current EPS of 30. We have a growth rate of 15%, or yeah, 15% growth. And so our future EPS is, so what we do is we take 15 divided by 72, or 72 divided by 15, 4.8 times. How many times does 4.8 go into 10? Well, 2.08. So now we want to figure out, okay, 2.08 times, that's how many times it's going to double EPS in the next 10 years. So then we take 30 EPS here times twice, so 60, and then plus, and then 60 plus 60, so it's another double. We'll have an EPS of 120 in 10 years. And that gives us future market value of 360, fair market value currently today 900, purchase price of 630. So we just take all these numbers we just figured out on the other calculator over here, put them all into here, gives us an average price of 485, and then a purchase price of 630, which is this price right here. I personally prefer this, and then I'll always take this into consideration. And so I'll probably look, honestly, I'll probably go look to buy below this 485. Well, now let's come over to the stock chart. So the stock chart right now, currently trading at $430 a share. So based on our calculations, this company is already undervalued. It's trading undervalued. So we have average price of 485, and right now we're trading $55 beneath that. So we have $55 of room of growth, of share price increase. And that's not to say that, it doesn't end up even higher, like close to that 630 number, which that's even got a 30% buffer on it. So 900 is fair market value on that one calculation. So today, right now, Charter is a good deal. The only thing now is look at some technicals. Okay, it's retesting this trend line that it's been making since the beginning of time. Now, I would assume this thing could just pop right through, or it's gonna retest this support line, and then go. And it's already broken its 2-year long downtrend, so now it's on its way back up. Maybe it does something like this. This is its move, but obviously substantially bigger. And then now we'll see if it's wants to keep moving higher. But as of today, Charter is, based on technicals, based on fundamentals, a good deal today.